Alright guys, welcome back. Today gave us a clear reaction across SPX, IW, and oil, and these are the levels that actually matter going into tomorrow. Starting with SPX, we pushed straight into that 6630 resistance point I talked about, and then again, we had no clean acceptance above it. Instead, we got a weak bounce and then rejection. That's the key here. This isn't strong price action. This is just supply stepping in at a major level. So as long as we're below that zone, this isn't a clean bullish environment. It's more likely we stay choppy or even see downside unless something shifts on the macro side. Let's quickly take a look at IWM, small caps. Same story. We pushed into that 248 to 250 supply zone and rejected today. Yeah, small caps bounced today. A lot of them did, but structurally this is still weak. The key level going into tomorrow is 245. If 245 holds, we can start building a base and maybe see continuation. If it fails, this move probably unwinds again. We did have a lot of good day trades today like UGRO and a couple others, but structurally we're still weak and we need this IWM to push through. And then oil. Let's take a look at US oil real quick. This is honestly driving a lot of what we're seeing right now. We had that big flush, but now price is sitting right inside a 15-minute demand zone. So this is a decision area. If buyers step in here, we can get a bounce, especially with how headline-driven oil is right now. But if demand breaks, oil likely continues lower and that can drag the broader market with it. Now let's do a quick breakdown on SIR. This was a really clean setup. I alerted this on March 19th at $2, and at the time it was just a simple 5-minute breakout. Same day we got that immediate follow through to 250. That's where I took my first partials around a 25% move right away. And in this market, I always prioritize locking something in early, so I took about half off there. After that, the next key level I was watching was 283. And this level mattered because for this to really expand, it had to break through that resistance zone. We actually saw that yesterday. Right at open, it pushed into that 283 level, rejected hard, and pulled back. So that told us supply was still there. And then today, once we finally got that clean break over 283, that's when the move opened up. And when we got that expansion into 314 and even 325 plus without much trouble, I scaled more into strength, around 75% out near that level, and about 90% closed into that 314 plus move, still holding a small runner target in that daily of around 409. Now, I do think we will get some more day trading opportunities on this stock in the coming days, so watch for this stock to hold that 283 level on the back test for a continuation even further. Now, real quick, I want to touch on trading psychology, and we'll go deeper into this in the future videos. I've noticed this a lot about new traders recently. They're actually good traders. They're new, they're learning, and they're picking the right stocks, but where they struggle is capturing the bigger move. What ends up happening is that they trade strictly around lower time frame levels. They fully enter and fully exit, and then later they look back and realize that the stock went another dollar or two higher. And that's where the frustration comes in. And the reason for that isn't strategy, it's just psychology. Most traders are wired to avoid giving back profits, so the moment they're green, they rush to lock everything in. At the same time, they want the bigger move, but their actions don't match that goal. So they end up stuck in this loop. They take profits too early, watch the stock continue without them, then chase the next move late. And that cycle repeats over and over. Some people call it a win-win because they locked in profits early. And yes, that's better than losing, but in my opinion, that's not the optimal approach. The real edge comes in from controlling that emotional response. As long as a trader sticks to something like a 3-3 or a 4-4 profit-taking strategy, you're able to do both. You're locking in profits early while still keeping a portion of that position for the bigger move. And more importantly, you're removing decision-making in the moment. You're not asking yourself, should I sell here? You already know what to do. That's what creates consistency. Because the goal isn't to be right on one trade, it's to execute the same process over and over again without emotion getting in the way. That's the real win-win. And as long as you're adjusting your stops properly at each level breaks, you're protecting that downside while still staying positioned for that bigger expansion. This is a strategy I've been using for over 5 years across day trades, multi-day runs, and swings, and it's consistently worked well. Alright guys, that's it for today's video. I'll see you in the next one.